Today I'm going to talk about my dividend stock picking strategy and hopefully it will help. Let's go. So I thought I'd film this one in my bedroom simply because this is where I do most of my research for which stocks I want to buy. I usually do it at night when it's nice and quiet. It's just easier to concentrate to see which stocks I want to buy, and then I'll usually set up my buy and sell orders at night also. Not that I do a lot of buying and selling. I'm actually a long-term investor. If I am rebalancing my portfolio or buying or selling for any reason, this is where I usually do it, at night in bed. Buying stocks for the dividend income is a lot easier than buying stocks for growth. There's less things to look at. You don't need to worry about the stock price or anything because dividends are paid out no matter what the stock price is. So whether the market is up or down, you're going to get paid the dividend no matter what the market is doing. So there's 4 things I normally look for when I'm choosing stocks to invest in for dividend income. That is, I still choose stocks that are in the ASX 200. The equivalent would be the highest market capitalization in your country. So in the US, that would be the S&P 500 or the FTSE 100 in the UK. And the reason for this is the companies that are in those larger indexes are obviously larger companies and they have more of a proven track record and they're generally likely to be more stable. Not always, but in most cases, they don't change that much year to year. The next thing I look at is dividend yield, and I'm looking for a dividend yield of 5% or higher. Now, it's pretty easy to find the dividend yield. It's listed on pretty much when you go look at any company research page, the dividend yield will be there. And good companies usually pay a dividend of above 5%, and great companies usually can get quite high, against 6 or 7%, sometimes even up to 10%, but then you've got to watch those. A high dividend yield like that is sometimes you need to look at why they're offering such a good dividend, because sometimes it's not always the best way to go. Now, if you don't want to go through all of the companies in the index, you can, there's certain sectors that you can look at, or you can start with the top 20 companies in your country. Certain sectors are more likely to pay higher dividend yields. Some of them include the financials like banks and insurance companies. They usually pay quite a good dividend. Utilities is another one that pays a good dividend, and also consumer staples, so things that food and alcohol, and so anything in the retail sector is usually also good for paying out dividend yields, and also property stocks are pretty much good for dividend yields as well. The third thing I look at is how stable the dividend is. There's many instances where the dividend yield might look great, but the dividend changes so drastically from year to year or even quarter to quarter that it's not worth it. You're looking for a good stable, it's either stable as in it pays the same all the time, or better if it can grow slightly each year. Now, there is a figure on most company research pages called Dividend Stability, and that's a good one to look at, but I prefer to actually go to the dividend page and see what the payouts have been. So you're pretty much just looking for consistency and maybe a slight increase each time, and you're also looking for consistency for when they pay. Some companies pay 4 times a year, some companies pay twice a year. You're just looking, is the time frame that they pay out consistent as well as the amount that they pay. Another thing to look for is if the company is franked, fully franked or not, which means the company tax rate has already been paid for you. That's 30% here in Australia. So at tax time, sometimes that can even mean that you get a refund depending on how your income is structured. So I quite like dividend stocks that do either have fully or partially franked dividends. I have got stocks in my portfolio that don't have any franking credits at all, but they're usually a little bit higher in dividend yield, and that's the reason I've chosen them. And the fourth thing I look at is just generally, is the company growing? I mean, there are some factors you can look at on our balance sheet for this, but mostly it's about just thinking about the company and whether you think it has any growth potential for the future. So is it a company that's likely to be like phased out because of technology, or do you actually see this company in 5 years or 10 years? This is more just thinking about whether you see prospects for the company in the future. So something like banks are usually going to be around, or the larger banks are usually going to be around, but maybe a smaller company that just creates one product may not be. and so on. So what should you be aware of, and what pitfalls are you going to look out for? Now, the main one is sometimes dividend yield can be inflated, either due to the stock price has fallen recently. So have a look at this chart and see if the stock price is going down, down, down. That can sometimes inflate the dividend yield and make it look better than it actually is. Another thing that can inflate the dividend yield, if the company in recent times has given out a special dividend or a one-off dividend, that can inflate the dividend yield too. Now, I quite like one-off special dividends, so just be aware that sometimes it can be included in the dividend yield. So the dividend yield that you usually get is actually a lot lower than what's being reported because of that extra dividend. You can just see that on the history of the dividends that the company has paid out anyway, just to work it out yourself. And of course, as I've mentioned, another thing to look out for is companies that you don't think have any potential growth in the future. Another thing to be aware of, which isn't going to influence what companies you choose for your dividend portfolio or not, but just you need to be aware of the ex-dividend dates. Usually the stock price will change quite a lot during the build-up. So on announcement day is when the company announces how much the dividend is going to be and when it's going to pay out. And a lot of people start buying during this period, so the stock price can actually go up during that period. And then on the ex-dividend day, where shareholders no longer need to be holding the stock, the company usually falls. And it usually falls by approximately how much the payout is going to be, how much the yield or the payout is going to be, is usually by how much the price drops by. And then the cycle continues, the stock price starts to climb again until the next announcement date, and the whole cycle continues. So that's not going to influence your stock picking strategy, but it's just worth being aware of. So let's go over what I look for again, just to be clear. I look for companies that are in the ASX 200, and that would be equivalent to the S&P 500 in the US and so on, the equivalent in your country. I look for dividend yields above 5%, but you've got to look at and make sure that that dividend is stable and it's not being influenced either by the stock price falling or a special dividend, because what you're looking for is sustainability, that it's going to continue giving you income over the years. So stability is very important. And of course, the final one is just in your own mind, do you think this company has future potential? So actually think about what the company does and whether it has the potential to go on long term, 5 years, 10 years, or what have you. So those are what I look for when I'm choosing a company to invest in for the dividend. I like dividend stocks because it doesn't matter what the stock market is doing, whether it's up or down, companies are still paying out dividends. So who cares what the market's doing? You're still going to get paid. So thanks for watching. I hope you found this helpful. And if you did, subscribe down below and I'll see you next week. See ya.